Stunning revelation from Christina Georgieva today. It is a revolution. CBDCs are here. Eventually, we just have to accept it. I think Julia Chatterley knows a lot more than she's leading on, and the questions she asks are very revealing. Don't forget to like and subscribe. Hope you guys have a good one.
Well, welcome to everyone, wherever you are joining us from around the world, to the latest The Exchange from the IMF, Conversations for a Better Future. I am Julia Chatterley, anchor at CNN, and today's conversation focuses on the future for digital payments, keeping an array of potential options. We're talking about central bank digital coins, right through to the use of potential cryptocurrencies in the future, items of huge interest, but also the underlying technologies. What might they mean for the future of payment technology and for us all? Can we foster greater inclusion, efficiency too, domestically and internationally? And can we be safe, secure and stable while doing it? I don't ask much. And the real joy of this, we're on the frontier of technology. There are no real experts that can incorporate all of these things. But I have to say, there doesn't get greater expertise than the privileged guest that I'm joined by at this moment. And I mean the Managing Director of the IMF herself, Kristalina Georgieva, and the Governor of the Central Bank of the Bahamas, John Roll. Both of you, thank you so much for making time for this conversation today. I'm very excited to be talking to you. And John, I want to start with you. You're a pioneer in this space. The Bahamas has its own central bank digital coin. Just explain and start there why you decided to be a pioneer in this space and what benefits you saw.
Well, thank you very much. And first of all, let me also congratulate and thank the IMF for putting the focus on this very important work that central bankers are doing and providing so much technical support in terms of the policy discussions. But for the Bahamas, we went this direction, one of the reasons being that we had to provide what we saw as a public good in terms of the upgrade of the infrastructure for our payment system. We were also on a path of modernizing our payment system, which we started about a decade ago. And as we neared closer to the end of the 2017, 2018, we started to focus on introducing new players into the space as a way of accelerating change. And when you start to do that, you have to also deal with how those players interact seamlessly. We also wanted to focus on a space where consumer choice could be exercised if we're going the route of mobile payments. And so the issue of interoperability started to come to the forefront and how one would achieve that, which is fortunately easy for us in the Bahamas because we started with very little activity on the digital or mobile payments front. And so when we started to talk about interoperability, there was an opportunity for us to put in place the infrastructure to immediately make the new providers of mobile payment services interoperable. And from that point of view, a central bank digital currency we saw as the glue that could connect the system together. And for us, there are goals related to financial inclusion because we want to provide the highway so that financial services on the whole can be delivered digitally in an archipelago setting such as the Bahamas. And we also want to address financial inclusion and financial access, recognizing that even though in many cases there might be access to banking and other services, if you're not living close to the services that are being provided in the capital, inevitably you're not getting always the standard of services that you might be satisfied with. And so we're addressing not just underbanked, but we'll be addressing unbanked and underbanked, but specifically trying to improve the access to services and using the central bank digital currency as a means of connecting together the new players in that space, taking advantage of the fact that we're starting from ground zero. So it was easy, very easy to address interoperability in this fashion.
Oh, I mean, there was so much in there. I love the idea of the central bank digital coin being like the glue that brought all of these significant players together and what you were seeing in the digital payment space. Kristalina, come in here, because this was just one of many eye-opening announcements that I saw over the last 12 months, both in the public sector space and in the private sector space. And I think you at the IMF have been incredibly honest. You said, look, we actually need to step up to keep up, quite frankly, with what we see going on here and around the world. Are we going through a revolution? How do you view what you're seeing and the role the IMF plays?
Let me first congratulate the Bahamas for leading this revolution, being the first country with central bank digital currency. And to say to the governor, it has been an honor to work with you. And it has been also a learning experience for the fund that we would be applying in other countries. So to answer your question, it is a revolution because of the tremendous opportunity this shift in payment systems to central bank digital currency, stable coins, provides to us as consumers in terms of speed, cost, accessibility. It is also an evolution because it takes time for countries to have in place the physical infrastructure for digital payments and also the institutional infrastructure. And I want to stress the latter. The regulators are wrestling with very important questions of trust, interoperability, the risks associated with shifting gear in that digital direction, like risks of cyber attacks or of money laundering, of crime being committed on digital platforms. So for us at the IMF, this presents a tremendous opportunity to work with the membership so they can capture the opportunities and manage the risks. And the very first thing we do is to help countries understand what is what in this digital space. First, to recognize that the safest form of digital money is central bank digital currencies. Why? Because it is backed by the state, because it is regulated and enjoys the trust that states have built over centuries in monetary policy. The second is private sector issued stable coins or e-money. Here in the United States, perhaps the best example is USDC, US digital coin, that offers a privately issued but backed with assets safe way of transacting rapidly, and it is exchangeable one-to-one to the US dollar. So if you decide to walk out of USDC, you exchange it for the traditional money one-to-one. Or payment systems like in Kenya, it is called M-Pesa, which is backed by assets. So when you are in M-Pesa, you're in a safe space. Predictable. Private sector, public sector, advancing digital money. And then comes the third category that people call money, but it is actually more an asset to invest in, like Bitcoin. These are privately issued digital assets that are not backed in a way that guarantees their value, And in that sense, they're not what traditionally money is, something that holds its value, you know how much it is. It is more an investment opportunity. And we see it as such. It is higher risk investment opportunity than many other issues related to it, but it should be differentiated from these two categories: central bank digital currencies, money, and stable coins or e-money backed by the private sector that is also money. I should add that in this category of stable coins, there are stable coins that are truly stable, but there are also some that are invested more like money market funds, and therefore they bring more risk to those that invest into them. What is the moral of what I'm telling you? A lot of work for the regulators. We have to help people understand what is what. So when they buy into it, they make an informed decision. And for the IMF, it is very important that we help uniformly our membership to navigate in this world that is definitely going to only exponentially grow in the years to come. To navigate and also to regulate, to protect consumers and protect the economy.
It's such a great point, and it's splintering to some degree too. And that also depends on your perspective of the utility value of cryptocurrencies, for example, or what the future of central bank digital coins and the trust you place in government structures, which to some degree in terms of the financial markets and the financial operations that we see today and things like quantitative easing have undermined in some nations, I think, the trust in the strength of currencies. John, it goes to the role of a central bank governor here. Did you feel some element of pressure when you were pioneering this? You've talked about the opportunities to access and provide financial access for the underbanked or the unbanked, but did you feel pressure, as Kristalina was suggesting there, from private sector alternatives, be they stable coins or decentralized coins? Did you recognize that a central bank digital coin needs to be perhaps at the heart of all of this as something that people can trust?
I would say that what the managing director has said just now could easily make for a week-long conference on the various themes.
We don't have time.
One of the important things she mentioned was that in the crypto asset space, and the emphasis being on assets, that we have in many cases instruments that are functioning as assets for investment purposes and doubling as payments. So immediately there's going to be a bit of a tension. In the central banking space, the focus is on enhancing the efficiency of the payment system and how the payment system assists in the movement of all of the other intermediated flows. And I think when you narrow it like that, we're not in the business of trying to provide something that looks and feels like cryptocurrency. Our deliberate effort is actually to dissuade persons from looking at CBDC as something that they should hoard. We want to maintain the role and the link with the banking system for the traditional use that people make and how they deploy savings. So it's very important that we do not view central bank or fiat digital currency as something that is going to function and behave like the crypto assets. That's not the focus. We're trying to make our payment systems operate more efficiently and to accelerate the kinds of changes we want to see in our system to address cost in intermediate inflows across countries and the like.
Okay, we've done polls on both of these things and we'll share them with our audience. I want to share with you the first one. Whenever I'm talking to people in the cryptocurrency industry and the underlying technology, blockchain, for example, what they all point to is the future benefits of this is greater financial inclusion. And we asked across social media platforms for the IMF this poll question: do you think digital forms of money will help or hurt the unbanked, underbanked to get access to financial services. And here are the results we got. The green shows you, just for those that are watching, the overall survey results. So what you can see there is 54% of those that responded saying they believe that digital forms of money will help the underbanked and the unbanked. 28% said they believed it could hurt the unbanked or the underbanked to get access to financial services, and 18% are not sure. Kristalina, I'm going to come to you first. What surprised me about that was actually the quantity of people that said they fear that digital forms of money will hurt the unbanked or underbanked. What do you make of that?
I make of it three things. One, that there is still digital divide.
Yes.
If you don't have access to the internet, if you don't have access to regular uninterrupted mobile phone services, you cannot benefit to the fullest of digital transactions. And unfortunately, if you take the continent of Africa, 50% of Africans, African businesses, African consumers do not have access to the internet. Majority have mobile phones, but not a guaranteed uninterrupted mobile service. So that has to be addressed. The second one is risks. The cyber attacks are a reality, and there may be an issue of if you are poor, uneducated, or you don't have enough understanding of these risks, you may be more exposed to them. And the third explanation may be the simplest, which is we haven't quite yet seen it working on a massive scale, so how do we know it's going to work? I'm a very strong believer that advancing digital payments, access to digital services is a way of inclusion and one of the big motivations for the fund to support countries to move towards exploration of central bank digital currencies and stable coins is because we believe innovation and inclusion go hand in hand. But we are aware of the risks, and we recognize that if we move without the right regulatory framework, trust can very quickly be eroded, and there could be the pyramid falling impact with long-term consequences. This is why we engage with our membership to prudently work through marrying innovation and inclusion with safety and security.
And it goes back to the point I think that you were both making at the beginning, that this has been a conversation between the two of you for years that has got the Bahamas in particular to this point. John, you understand what this feels like in practice because you're, as we've discussed already, pioneering this with the sand dollar. Just explain, addressing some of the challenges that the managing director pointed out there, and at the heart of this, whether you're talking about a digital currency or ordinary money, trust is essential.
Trust, I would say trust, and also confidence in the system, because in the payment space, when money is transferred, people expect to have access to it and to be able to use it. And in the Bahamas case, one of the reasons that we put an emphasis on mobile money was to have a more accelerated recovery in the case of natural disasters, because we want to make use of the wireless system for payments in the case of, say, destructive hurricanes. In that case, there has to be deliberate focus on your telecommunications infrastructure and the reliability. So that is an issue that we very actively think about in the Bahamas. In terms of access and the issue of fear, we have a process where the government is also pushing to make more of its services available digitally. So even with the government, we have to deal with whether persons have the means of accessing government services through electronic channels. And certainly the issue then becomes whether you have access to a smartphone or other device that will allow you to access those services. So that is certainly something that we are very attentive to in the Bahamas. Fortunately, we have a very high rate of use of smartphone and devices. I think in the Bahamas the estimate is above 90%. But trust also comes down to issues around cybersecurity. And so from a governance point of view, we made it very clear in our regulatory structure that there were certain things as regards the new payments infrastructure where they have to be independent and transparent ways of looking at the resilience of the system to cyber attacks and the like. And then the other element of trust that is so important here is to recognize that people are handing over their money to someone else in a custodial fashion. And therefore, you need to make certain that you have the consumer protection measures in place so that they can be confident that their monies will be there and available for them. This is basically like a checking account on steroids, so to speak. So it isn't a deposit. And so from that point of view, you have to make certain that those who are holding mobile monies for individuals understand that you don't have the same flexibility as, say, with a traditional deposit and the like. And so we're addressing all of those, but particularly the access that is related to technology and the role that the government has to play there, particularly when you're going into parts of your country where cash might be the predominant mode and you're trying to transform an entire ecosystem into being digital. So you have to deal with access. And it is one of those issues that we are very actively in conversation with our Ministry of Finance.
I mean, it's early days, but very quickly, how much use are you seeing of the sand dollar?
We are not seeing a high use yet because there's been a lot more focus at this point on product development. And because we are in the background and allowing the financial institutions to be the ones to make use of the instruments, their early work has been on developing their technology platforms, making sure that the platforms tie in and are interoperable with the sand dollar platform. That work is completed now. So what you will see is that the central bank will be making a deliberate push around encouraging adoption and use. And that is a campaign that we are literally starting as I speak.
Yeah, education is crucial on this point too. Kristalina, you've already alluded to it, and you very helpfully, because you saved me having to do it, describe the differences between a central bank digital coin, a stable coin, and the decentralized coins, for example, Bitcoin. I cannot have you both here without discussing the El Salvador decision to announce that Bitcoin was going to become legal tender. They were fully behind this. And just listening to you both again, talking about the processes, the years of work that's gone into establishing a central bank digital coin, what do you make of that decision? Where does the IMF stand? And how, and to what degree have you been speaking to El Salvador about the potential pitfalls?
Well, let me start by saying it is a sovereign decision.
Right.
Being a sovereign decision doesn't automatically make it a very good decision, because what it introduces in El Salvador is highly volatile asset to serve as a currency. And the risks it brings are for the naked eye to see. One, how do we know what we collect in taxes when Bitcoin goes up and Bitcoin goes down? How do we plan for expenditures? Remember, in April, Bitcoin crossed 65,000, and then it dropped almost half of it. That is a problem that the Ministry of Finance is going to be wrestling with. It is not an easy one. Secondly, how do people plan, individual consumers or the vendors that have to sell goods and services in that volatile asset? And the third one is, those who know me know I care very deeply about the environment. One of the issues with Bitcoin is mining Bitcoin is very energy intensive. So we are as a world wrestling with a risk that climate change presents, and the Bahamas can talk a lot about what this risk actually means for the well-being of people. How could we justify highly energy-intensive mining of something for which they are much better, stable, and reliable substitutes. As I said in the beginning, it is okay to have an asset that people invest in. When it is a more volatile asset, therefore riskier asset, it takes adventurous investors, but that's fine. What is a problem is when we tied up the fate of the economy to the volatility of this asset. And to have it to be currency, it has to be very broadly accepted. There is acceptance, but it is not on any scale that would make interoperability an easy solution. So it is ongoing. Of course, there would be points to evaluate how this is going. But since you asked me what we think in the IMF on that, hard to make an asset to be a means of payment, and what we care about is efficient, effective, reliable payment systems.
John, I'd like to get your view, please. Can we go as far as saying it's irresponsible?
Well, I think there's clearly a lot of thought and consideration that would need to go into this type of policy decision. As Kristalina pointed out, you have an asset now that is going to be used primarily in payments, and so those who are receiving that asset as payment have to deal with all of the challenges around converting in and out and securing valuation and planning. So that is something that any country that sees something like Bitcoin or crypto asset, volatile crypto asset being used as payments will have to grapple with. What is also important in any national context with financial services is that you also have some way of being able to regulate properly, and not regulate from the point of view of stifling innovation and use, but regulate so that you can look after the welfare of those who are using the instrument.
Can you pinpoint what's the greatest concern here, or is it just all a little overwhelming at this stage? And have you voiced this opinion to El Salvador?
It is the concerns I started from on fiscal policy, monetary policy independence,
right,
and consumer protection. These are all, actually it is hard to pin down one because it is the combination of concerns that from our perspective makes it a decision not advisable, at least not advisable at this stage. When we, of course, we have been engaged with El Salvador. As I said in the very beginning, it is a sovereign decision. We have shared our thoughts around what are the risks. And unfortunately, there are no easy mitigation strategies for these risks. As I said, the best and the most prudent approach is there would be a period of time. The law would get into effect, if I understand correctly, 90 days after it is enacted. And there would be a period of time to see how does that work. And what choices people make, given that the dollar continues to be the alternative currency businesses and individuals can choose.
Yeah, I mean, this is part of a broader conversation. It's not just about, I think, domestic interchange, but Kristalina, as you mentioned as well, how, as a business, do you manage payment flows for goods that are coming into the country, given the volatility? So there's all sorts of things here. Let's look at the international aspect of this as well, because I read this week that roughly 250 million people send over $500 billion in cross-border remittances annually, and they pay an average fee of 7%. And this is something where I know the IMF, John, you'll also weighed in on this, and I feel very passionately that this is ripe for disruption. We should be able to bring these costs down because in many cases this is lifeblood for families that are receiving money back home. We asked again IMF viewers across social media platforms in 5 years' time, so not today, so we give it a bit of time to progress, which of these do you think will be used to send money to family and friends abroad? And here are our results again. And what's fascinating about this for me is the differences between people that responded on a place like LinkedIn versus Twitter. You can see 62% there of people that responded on Twitter believe that cryptocurrency will be the way that the majority of them feel that the money will be sent to use remittances. Just 23% believe they'll be using central bank digital coins or some form of government digital money. Reverse that and look at LinkedIn, and obviously a far greater proportion there of people on LinkedIn believe you go the government way or you go the central bank digital coin way. And overall, cryptocurrency, the winner here, is the way to send remittances to friends and family abroad. Kristalina?
Let me start by recognizing that private sector has a huge role to play.
Yes.
In banking, traditionally, if you remember the history of banking, it was individual private banks issuing currencies, and then over time, the state consolidating and having that public-private partnership in place. Today, when we look at the banking system, we have the central bank that is the last resort. It settles the interactions. But then you have private banks issuing most of the currency that we rely on in the non-digital world. It is not going to be any different, I believe, in the digital world. We would have a role for private sector issuance, so we would have stable coins and e-money coming. And we will have a role for the state, for the central bank digital currencies. Not very different from history before. What we have seen is the private sector stepping forward a bit faster. And the public sector, in a way, catching up. But catching up with power of ability to settle transactions and to regulate how trust in society can be built. So what do we know? We know that based on a survey we have done at the fund, 110 countries are either discussing or piloting central bank digital currencies. So central bank digital currencies are coming. But they're not here yet. So you ask people, would you send money with central bank digital currencies? With the existence only of the cent dollar today, it is hardly a surprise that they don't say, oh yes, we will. But then we have to look at the advancements on the private sector side. And there has been progress. I quoted USDC. I think this is going to also expand. And we also have the crypto assets we discussed. They play a role. I frankly believe that we would see the two reliable in a sense of being stable, predictable, backed up by assets, central bank digital currencies, and stable coins backed by assets to take a much bigger role over time. And actually a small footnote here. You said people in Twitter, they go cryptocurrency. People on LinkedIn, they are not as enthusiastic. And they tend to be those that get more deeply into the research and evidence on matters. So, but again, the bottom line here is, we used to say, Julia, the future is digital. Well, the future has arrived. And we all have to recognize that digital money, both central bank digital currencies and stable coins, they will continue to expand their role in our societies. We better get our act together to make it sound and predictable, not to repeat the history in the past when people would lose all they have because individual banks would let them down, would go bust.
Yeah, this is such a great point. I love your point about the timing mismatch here, and that the private sector actually has to catch up with the public sector has to catch up with the private sector, and then you'll see all the tools available that allow you to do these things with greater efficiency. John, your thoughts on this, because as we mentioned at the beginning and we keep mentioning, you're right up there with the private sector. Even if you're only seeing small use at this stage, you're saying, hey, look, we are providing the government option and we're doing the research and we're providing the resources.
Yes, I think, Julia, that what the polls show really is a critique of the ways in which individuals are dissatisfied with the way the payment system works today, especially if they're trying to send money across countries, and therefore the private sector has innovated and moved faster in terms of getting persons to get money across borders. But there are lots of complex regulatory and other issues, consumer protection as well, that remain to be resolved. And to the extent that you are seeing the response and central banks and others are looking at the issues, means that the awareness of what can be achieved through those channels will grow. I don't believe for a moment that the crypto assets are going to somehow disappear once the central bankers get caught up. But there are issues that will still need to be resolved, and the central bankers are likely to have, a way of doing it without the commercial interests attached. Because even though the crypto flows are moving across borders, there's still a conversion that is occurring on the receiving side if people are genuinely going to be using those for payment. And so that still remains an issue, a problem that has to be solved in a stable and predictable way. And so I think what is positive is that now you're seeing the very serious and heightened response and attention of this within the central banking and the regulated sector. And I think that's positive.
I think what it also reflects to some degree, at least as far as the Twitter sphere is concerned, is a loss of faith in government. And I think another point I'd make is that the cryptocurrencies have the ability of defying borders in a way that what we're talking about in terms of central bank digital coins do feel like they're for domestic utility use as a payment tool. I just want to fast forward to a world, and we know it's happening. Kristalina, you mentioned it, the 110 different governments looking at central bank digital coins. If we have a world where we're making all sorts of cross-border transactions, but we've got a digital yuan, a Fed coin or a US dollar coin, we've got a Bank of England coin, we've got a Bahamas coin. How do you control financial stability? How does the world look in that case when you've got all these coins operating in individual nations but not necessarily operating across borders?
Well, this is why it is so very important that the IMF and institutions like the Bank for International Settlement step forward very actively to provide a platform for countries to share experience and then to make it possible for interoperability of central bank digital currencies in the future. And that is what we take very much to heart at the IMF. This is why we are engaging in our annual consultations with countries. We are bringing this topic of digital currencies, how we are thinking about it, not only central bank digital currencies, also private digital currencies, because we are moving. And let me make 2 points on this. One, the world, the monetary system is already digitalized. We are operating in a digital space. What is new is new technologies make the speed and accessibility so very different. And I agree with John that bringing down the cost of payments making payments fast, but at the same time secure and protected against crime. This is what we are wrestling with. And I have confidence that we will come as a world with a monetary and financial stability in mind as we make progress. That countries, the same way they built over time the duality of national sovereignty over monetary policy, but international operability of currencies and ability to exchange currencies, to substitute one for the other, that this will continue. We have to be very mindful of our weaker countries that even today suffer from currency substitution because domestically people don't trust their national currency.
Right.
We also, you brought this point, and it is so true. The global financial crisis, it undermined the confidence of people in their government's ability to provide financial stability. So how do we deal with it? We deal with it by working tirelessly together to have rules-based and also aligned with advancements in technology. And I see it positively. I see it as a tremendous opportunity to make our world fairer and more inclusive. But it is not going to happen unless we all work together. And our responsibility in the IMF is, with our almost universal membership, 190 countries, to make sure we are a platform for moving forward in this world, grabbing the opportunities and managing the risks at the same time.
It sounds like a fantastic world. John, how do you feel about having the digital yuan or the Fed coin of the future being used in the Bahamas?
I think it's an eventuality that we have to accept. Even in the present modes of payments, you see various instruments being used, not just local currency instruments, and you have a foreign exchange market that reconciles the flows. What is important to recognize is that in looking at these financial stability issues, it's really to help central bankers do the best job at designing some of these innovative systems. So I think from that point of view, and all of the discussions that are happening, I feel confident that we are looking at central bank digital currencies in the right way, and it is important to look at these issues. Beyond the financial stability issues, I think we have to be especially concerned about cyber risk and the other, and protect the system against financial crimes and the like. But there isn't a barrier that you can put up against good policy and good governance. And I think these sort of reforms are showing that the best way to counter those risks will be to improve your systems of governance around policies.
Such a great point, and such a great point to wrap up on. I think part of the innovation that we're seeing is alternatives having to be found because people have felt let down, and we all have to respond to that, whether we're individuals or institutions or governments and beyond. Final quick question, because I have to wrap this up as much as I'd like to keep the conversation going. If we fast forward 5 or maybe 10 years, because I have to give us a bit more time, do you think the US dollar as the world's reserve currency in its current form remains the world's reserve currency, or do you think digital X, and you can fill it in if you choose to or probably not, has taken over? Kristalina, to you first.
Yes, the US will be reserve currency in 10 years.
A digital or the current form?
Whether it is the current one or it is a digital dollar is to be seen. That is, let's get together in 10 years and see what we have in our wallet. Is it a digital dollar, digital wallet, or we still rely on the dollar as we know it? And it is very likely it might be both. Why? Because the strength of the US economy, the depth of the capital markets in the United States, and above all, the innovation capability of US companies. That is what is lifting up the United States. And we would see likely some changes in the composition of reserve currencies. And I'm pretty sure there would be presence of digital in that world 10 years from now. But for those of you who have your savings in the United States in dollars or somewhere else in dollars, yeah, the dollar is going to be there. It will be a reserve currency.
John, your view, please. Feel free to say something controversial. The sand dollar is an option.
Well, I think in terms of payments, you are going to see a more diverse mix and balance,
right,
simply because the direction we're moving in, it's going to be easier to settle in those other instruments. That's one of the advantages of dealing in dollar flows. But insofar as trade and commerce is concerned, to the extent that the United States economy remains strong and dominant, that is also going to determine a great deal of what happens around reserve holdings and reserve currency allocation. So from that point of view, there is, as Kristalina is saying, likely to still be a strong position that the US dollar will hold.
I think in the end, what we hope is for a stronger, more inclusive, fairer financial system, and it seems that we're all working towards that. Thank you so much for your time. Thank you for watching. It's great to have the Managing Director of the IMF there, Kristalina Georgieva, and John Roll, the Governor of the Central Bank of Bahamas. To you both, thank you so much for your time. To our viewers, thank you once again, and thank you for joining us here on The Exchange. Thank you.
Thank you.